Alrighty, everyone. In this week's plan, it's going to be short and sweet because I'm only watching two levels. Just like last week's video, I started off looking at SPY weekly and looking at the wave count. I want to talk about SPY's weekly candle first. We can see right here, ignore this short GP. I will go over that later on in this video looking at ES. But if we look at this week's weekly candle right here, let me just highlight it for you real quick. We see that it closed as a inside candle, essentially, or an inside body. So it shows indecision in the market. Now, keep in mind, last week was a very volatile week. We saw multiple 1% trend moves throughout the week, yet the candle closed inside the previous week. So the market is starting to enter a balancing phase. Okay, the market balances before the next large directional move comes. We've had 3 straight weeks, up until last week, we've had 3 straight weeks of selling action. Last week was the first time we saw consolidation, so the market is now building for the next directional move. It can come to the downside, and I am unconvinced that wave 4 is finished. Okay, so keep in mind, wave 4 is the correctional wave to the downside. I'm unconvinced it is done because, one, we have yet to see how do I word this? We have yet to see a dominant reversal candle for buyers. So in other words, I'm saying I'm not convinced the bottom of this counter wave or this counter trend is in yet. And 2, price has yet to test a key fib level. So we broke below, let me delete this real quick. We broke below the 23.6 fib. Okay, obviously that was a couple weeks ago. Price is yet to test the 38.2 and the 50% fib. As I said last week, a longer term, very healthy swing low comes in at the 50% fib level you have, or the golden fib for that matter, and it would still be a healthy correctional move to the downside as it sets up wave 5 to potentially test all-time high. So I'm unconvinced wave 4 is done, but depending on how this upcoming week goes, we did see an inside body. The market is consolidating or balancing as it builds for the next move. So it could be in. I'm just unconvinced heading into the week that it is definitely in, if that makes sense. So I said a few minutes ago that I'm only watching 2 key levels this week. And those levels are 44.30. Let me find my text tool so I can type it out for you. 44.30 right here. And the second one, again, 43.50. Okay, so there was no close below the bear Liz last week of 43.50. And the 44.30 level did provide some trades last week. Once it broke as resistance, we saw a very sharp rally higher for 50 plus points. And once it was lost as potential support again later on, the very next session actually on Thursday, it led to about another 50 points to the downside. So overall, a very volatile session. We did confirm sellers were there again on Friday as we saw 2 rallies into the level sold off. Okay, so these 2 levels are my key levels for this week. So long as there is no daily close below 43.50, buyers remain in the game. Okay, now keep in mind ES overall is balancing. I just showed you SPY. The S&P 500 is in the balancing mode right now. A daily close above either of these levels signals that the balancing session or the balancing action is most likely finished, and we're about to see a large directional move that can be a multi-day move. Okay, now of course keep in mind there's always going to be the possibility there's like a daily close above 44.30, and then the next day price falls right back into the balancing zone and closes back below the level. That would be a false breakout. It's always completely possible, but that's more of a hypothetical what if scenario that I'm not going to be focusing on. If we see a daily close or even bigger, a weekly close below 43.50, that is a strong bearish event occurring, and it basically sets up price probably testing 4,200, so 4200, sooner than later. Okay, that's a massive, massive level. I will go over that in detail when the time comes, but that is a massive, massive level. And once we see a weekly close below 43.50, it does basically solidify, in my opinion, that sooner or later a test of 4,200 is coming. And when that test does come, that dip should be bought, in my opinion, because buyers will want to defend the hell out of that level. And that would be a much better longer term swing low being put in place as the S&P 500 potentially gears up for an all-time high test. So a daily close above 44.30. If we see that shorter term, I like the 44.80 level as a target. Longer term, I definitely like 4,500 and 45.20. However, in the shorter term, from 44.30, I do like 44.80, and that would just be a retest of last week's highs. Okay. In the shorter term, again, if we do see a daily close below 43.50, 42.85 is my intermediate to shorter term downside swing target. So that's about another 50 points or so. Actually, it does sound right on the dot. It sounds like it's about 50 points lower. So we're looking at a 1% move down again, roughly below 43.50. So once we do see that move lower and we tag that 42.85 level, that's a good place to lock in profits on short positions. If we do experience a weekly close below 43.50, I do strongly incline, just to reiterate, the selling is not done and a test of 4,200 is coming sooner than later. So now I want to flip back to ES as I reconnect this chart. Here we go. I want to flip to the daily. Let me lock it back in. All right, I'm going to zoom in right here. All right, so we're looking at ES again, just two different setups that I have. So here's the 43.50 swing low. Let me switch my tools. 43.50 swing low is right here. Assuming there's no daily close below that level and that swing low remains in place as support, I do lean towards price eventually taking out that 44.30 level, and we will see a move higher into the golden fib right there. Let me redraw that because that was really shaky. There we go. That doesn't look any better, but that's funny. So when we see a test of this golden fib right here, the 45.26, that to me offers a high probability short. Okay, this short setup becomes invalidated, in my opinion, with a weekly close above 45.50. So basically right here, a weekly close above 45.50 or the 70.7% fib level of the short GP invalidates the short setup. However, I think the first move into this short golden pocket here will see a reemergence of sellers essentially, and we will see a test and a move lower again of the 44.60 level. Let me go ahead and delete one fib level so it makes a little bit more sense to you guys. So just to reiterate, the move into the golden fib, I think will offer a reemergence of sellers. 45.26, 45.51, those both offer really good short entries, and I think sellers will at least push price lower again back towards the 44.60 level, okay, or test the 38.2% fib level. Okay, so that is basically my plan for this week. Keep in mind, this short setup is only valid with a daily close above 44.30, okay? So long as there's no daily close above 44.30 or below 43.50, the market remains in a large balancing phase as smart money essentially builds for the next large directional move. Okay, so keep in mind the last three, or up until last week, we had 3 red weekly candles in a row making fresh lows. It was only healthy for the market to put in a shorter term bottom, which I discussed last week. That was the right thing. Following Friday's candle, we saw a really large move higher of over 100 points before Thursday's session. So the balancing action, it could last, I would say it could definitely last through half of the week, maybe into Tuesday or Wednesday at worst. But by Friday, I fully expect a daily close above or below the 2 key levels that I mentioned. So if you enjoyed this video, I would greatly appreciate liking and subscribing to this new channel. And if you have any questions for anything that I went over, feel free to leave them in the comments below, and I'll be more than happy to answer.